Hi, this is ProExam with this update on Common Reporting Standards. Around about 10 years ago, exchange of information was introduced by the OECD. The OECD is International Tax Rules Organisation, where intergovernmental agreements are made to apply international tax rules. Common Reporting Standards mean that each country gets common reporting standards for the beneficial owners of any income or any capital gain or any other asset within their jurisdiction. By having a common reporting standard for each country, that information can then be uploaded to the National Tax Office and then exchanged to any other organisation around the world using the common reporting standards, because the information is the same. So you'll see in your local tax resident country a .gov website appearing where the collated information is collated and enables it to be exchanged with the common reporting standards. So everything is going online. So if you've got a pension, you've got dividend income, you've got earned income, you've got a property investment or a property sale, then any of these financial institutions are obliged to collect your personal information to a common reporting standard. That means they need to see your photo ID, they need to know what your tax number is, and they need to know what your residence is. Obviously your residence needs to match up with your tax residence in terms of addresses and IDs. So wherever that institute that's collecting that information to identify the beneficial owner of the income or the asset that they're responsible for, they report that to their local tax office. So if you own a property in Bermuda and you're renting it out, the common reporting standards will collect your ID and your tax information in Bermuda, and Bermuda will then share that with any other tax office which is associated with you. So a British expat with a Bermuda property, Bermuda tax authorities will share it to the UK. If somebody is a retired expat in Cyprus and they're receiving UK pensions, the UK pension company will collect under common reporting standards the identity of the person, send them an annual statement of the pension that they're being paid and the tax that's being deducted or not to the UK tax authorities, HMRC, who then share it with the Cyprus tax authorities. So any ultimate beneficial owner of any trust, any property, any business, any pension, any investment, any shares, any bank account or any deposits, there's a common reporting standard that each institution is obliged to collate and then share with the tax authorities. So what expats need to do is, in their country of tax residence, is complete a tax return and make sure that it's completed in full and declares their worldwide income. Doesn't mean that there's tax to pay, but if you don't share all your information, common reporting standards means the exchange of information will bring up any anomalies, and the anomalies between your declared information and what is confirmed from the tax office will actually potentially lead to investigation or issues further down the line when you're trying to sell property or if somebody in the family dies. So keep your records up to date. ProAct offer an annual tax return service which includes advice, reports and registrations and tax returns, all within a year for £1 a day. So if you want more help and guidance for expats living and working abroad, contact us at proactpartnership.com.